In last week's analysis, I had told you gold has seen higher lows. It is failing to breach the lower levels. At the same time, there is a pullback on the upside. We may see a pullback this week too. And that is what has happened. Gold has traded in green and tried to close the week in green, achieving 1730s as the high. Now, what is going to happen next week? Should we consider this as reversal? Is it going to rise from here? Should we buy or should we remain short? We will see with the help of charts and indicators. Missing on to subscribe this channel is missing on the profits. Do not commit this mistake. I share my daily update on gold twice a day. I share the levels to trade gold. Do not miss to watch the daily updates as well. Do press the bell icon. Let's start the analysis. These are the weekly charts, and on the weekly charts, as I have already shared, higher lows are seen in gold. It is failing to go past the previous lows, indicating that there could be a pullback on the upside. At the same time, just look at these last three candles, lower highs, higher lows, indicating a phase of consolidation. So next week, if you see it trading above 1730 levels, trading above 1730, yes, you can stay long, and then you can expect 1745.50 zone. This is going to be crucial. In fact, this can achieve 1765 as the high. Now, what should be termed as a reversal? From which point you can consider that gold has reversed its trend? Because see, this is trading in a bearish trend. Now look at the trend here, a sharp drop, retracement, further sharp drop, retracement, and this time if it is trying to reverse from here, which is failing to break past the previous low, this indicates that possibly it tries to reverse from here, but at the same time, till it is below 1790 1780 zone. This I told you last week also. 1780 1790 zone, watch out for these levels. Till the time it trades below these levels, should not be considered a reversal. In fact, once it breaches past 1800, you can stay long from there, and one can expect it to rise from those levels. So be watchful of 1780 to rather 1800 levels. This is the zone. If gold breaks next week, next to next week, any point of time, if it breaks these levels, definitely that should be considered as reversal. Till the time it trades below 1780 or 1800, it is a retracement from this bearish drop. It can retrace lows, and then a sharp drop can appear possible. Now these are the weekly charts. Let's have a look at the daily charts. See, do watch this video till the end. In the end, I will give you the trading strategy and trading levels for next week. And if you trade, just stick to the levels. If you trade or enter the trade as per the levels, definitely you will ensure the profits. So do watch those levels as well. Do watch till the end. Now listen, these are the daily charts, and on the daily charts, we can find out 4 candles giving you higher highs. But look at these 2 candles. It tried to go up, but then pulled back again down. This tried to go up, but then again pulled back down. It indicates that there is a stronger resistance on gold on the upside. It is failing to go past 1730, and this time, see, if it sustains above 1740, yes, possibility exists that we may see 1765 and 1760 level. These 2 levels are going to be important for gold if it sustains above 1735-40 levels next week. This is another observation. Now look at the last 2 candles here. This time it started the day with a flat note. There was no bearishness. It just tried to pull back again on the upside. Getting the resistance on the upside, it tried to drop again. So it is still in the consolidation phase, and if you look at this is the channel it is trying to create. On the downside, the support there at 1795 is going to be strong. Only if it breaks past 1695, yes, you can consider this as bearish. Till the time it trades above 1695, possibility of it to reverse exists. Yes, you can go short at 1710 itself. If you see it trading below 1710, you can expect 1700, 1695. Only bearishness is if it breaks below 1690. Consider that as a continuation of the downward trend. This is a retracement, and then a downward sharp move can appear. So be watchful of 1710 on the downside. If it continues to trade below 1710, definitely it will call for a good fall. Now look at the 4-hour charts. On the 4-hour charts, look at this. Highs are well connected. See the slope of this line. Very minimal slope, but look at the lows there. Higher lows, very well connected out there, and yes, higher highs but with very little gradient. So this is an ascending triangle, but at the same time narrowing, diminishing bullishness. At the same time, the support there on the downside is very well there. So yes, this time it appears once it breaks past 1730-35 levels, definitely it will call for a stronger move. At the same time, if it breaks below 1710, you can expect a further fall, and on the downside I will watch for 1695 1690 levels, breaking below which definitely we can expect a sharper drop. So see, you can whenever you see sharp drop, and the look at the gradient of this line. The slope here is steep, the slope here is you can say with a very little angle here, and it indicates that the bulls are not very strong here, and hence if it continues to fail, this may call for another steep decline. So be watchful and careful there. Now coming back to the monthly candle, see on the monthly charts you will find 5 straight red candles. At the same time, if you connect the dots here, if you connect just the highs of these candle, and if you try to find out a slope out there, it indicates that this zone between 1780 1800 is going to remain prominent resistance level for gold. Only if it sustains beyond this zone, only if it tries to trade beyond this zone, and in fact till 1810. So 1780 to 1820, this is the zone which you should mark out for, which can be a very prominent resistance zone on the upside. Now look at this, see 5 red candles indicates, or rather it probably suggests that we may see a little greener candle, and that is what we are seeing here. If this time it fails or drops below 1680, which is a prominent support level, see multiple times we have seen 1 2 3 4 5 6 months candle there getting the support here and trying to bounce back from these levels. See below this, below 1680, I have told you several times, this is the zone which it will try to achieve, or it will achieve for sure, that is 1600 1580. Below 1680 definitely it will hit 1600 1580, and then it has a probability that it can give you a sharper drop till towards 1500 also. I will watch for this till the time it sustains above 1680. Possibility of a reversal cannot be denied there. So this is the observation on the monthly chart. Now let's have a look with the help of the indicators, whether the indicators are also in sync with the observation there. This is on the 4-hour charts. Here is the 20 period moving average, and in fact the 50 period moving average coming together, sitting at 1710 levels, which again makes it a stronger level for gold to break past by. If it sustains below 1710, definitely it may call for a stronger drop further on the downside. That is what we had seen. Also look at the 1730 100 period moving average, 20 period or 200 period moving average, both coming together. Also this is a consolidation, so just do not trade between 1710 to 1730. Directional movement here on the 4-hour charts is bullish, but it is narrowing. The stochastic is seen a high, it is trying to see the lows again. Let's see if it continues to enter into oversold zone. At the same time, see it is creating a structure, it is trying to converge here, and possibly once it crosses over we may see a further drop. Look at this, see previously we have seen gold trading its bearish momentum or extending its bearish momentum for a little long, then a bullish move came, and see the crossover on the bearish side was for a very little time, and again it has come back to the greener side of it. Now possibly once it crosses over this time, this may call for another round of good drop. We have to be careful there. RSI is still looking upwards, and now let's have a look at the daily charts. Now see why 1730 is giving it a stronger resistance. This is the 20 period exponential and 20 period simple moving average, giving it a stronger resistance at 1730. Once it sustains above 1730, this may call for little bullish move, and then as I said, this zone at 17, if it breaks past 1745-60 zone, then 1780 levels are going to be the resistance. Also on the daily chart, see it has seen the bottom of the Bollinger Bands. Also the parabolic SAR has come back into green, so it indicates that it is still trying to trade little bit bullish. Now look at the directional movement is bearish so far, it is trying to converge. If it crosses over, we may see little bullish move. The stochastic is looking upwards, indicating bullishness. The MACD is on the verge of a crossover, one green candle, and it will cross over for a bullish move. and we will see how it behaves. If it continues to trade with the divergence, gold may remain in a bullish zone. Be careful there, just wait for it to cross over and sustain. RSI looking upwards here, it has seen a bottom there. Now look at the weekly charts out there. On the weekly chart, this zone at 1800 to 1840, this is the zone which is going to give it a very strong resistance on the upside. All the moving averages 20, 50, 100, simple, exponential, parabolic. So this zone becomes of prime importance for gold to breach, pass by. And I have told you several times, sustaining above 1840, gold will hit 2000 levels. I will be careful of 1840 levels. One should be careful of 1840 levels. If it sustains above 1840, you may see 2000 level again in gold, and then you can see it creating all-time highs again. Be careful of this. On the downside, see, it has created low lows, and see, this time parabolic SAR on the weekly charts had turned green, it indicating little bullishness. At the same time, it has traded near to the bottom of the Bollinger Bands. Also, the width of the Bollinger Bands is narrowing. Probably we may see a confined movement or a range bound movement. Directional movement was bearish, trying to converge on the weekly charts. Stochastic is looking downwards, still in the bearish note. The MACD is still trading parallel, and it is still bearish. It is not showing a sign of converging or convergence there. Only if it converge crossover, it may take maybe couple or more weeks for it to cross over and enter into buy zone. We have to be watchful till then. RSI near to bottom, and if you look at the monthly chart, on the monthly chart, the 20 period exponential and simple moving average going to give it a resistance at 1800. Very strong resistance there. The directional movement you can see so far gold has traded in a green zone since 2019, beginning of 2019 till now, almost 3.5 years. On the monthly charts, gold traded in a bullish zone. This is the only time when the width has narrowed, and possibility of a crossover exists. If it drops below 1680 this time, we may see gold crossing over and taking over to a bearish move. Now see the stochastic is again entering into oversold. So the stochastic trading oversold here on gold, and this is happening only, this is a rare phenomena on the monthly charts for gold, where we see gold trading oversold. I have told you last time also, see, very few occasions we have seen gold trading oversold in 10, 15, 20 years. Hardly we will get 4 to 5 incidences. Now look at the MACD on the monthly charts, is still divergent, still bearish. Wait for this month's candle. Let's see how it behaves. Probability of convergence exists. RSI trading flat there, and it is exactly poised at the median. Now we have seen the charts and indicators. Let's see the strategy for next week and the levels for next. And before I give you the trading levels and strategy, see, if you want to learn this art of trading profitably, taking right entries at the right times and the right exits, and the strategies to do so, you can join my mentorship batch. The 15th batch is going to start in next couple of days. You can either be part of it, but I think only couple of seats left. You can reach out to me for more details on it. This is going to be a 15-day session. It is going to be 90 minutes live webinars, and there is a support available for you even after the training session. So do join this mentorship program. Definitely it will help you become a profitable trader, or else you can just support my effort here on YouTube or reach out to me for any queries there. So you can become a patron. On the patron site, you can just be a supporting partner. The foundation program is there, where with your minuscule contribution you can definitely help and motivate me. So do join the patron page. The link is mentioned in the channel and video description. Also join my Telegram channel. Now next week, if you see gold trading above, now if you have listened to the charts carefully, I will recommend you to go long at 1832. Then you can expect, see, I will give you very little deviation there, and 1840 and 1845. Just be watchful of these two. If it breaks and sustains above this zone 1840 to 1845, definitely you can expect a stronger bullish move in gold, and then I will look forward to 1858, and beyond that you can expect 1871 and 1880 levels. Now here comes the strongest resistance for gold, and only if gold sustains above 1880, correcting it 1732, this is the level where you can go long, and then 1740 is the first resistance, 1745 is the next resistance, and then it will try to hit 1758 and 1771. So see, we have seen earlier that there is going to be a resistance there at 1780 levels. This zone, first zone is this 1740-45, and then this zone at 1780. These are going to be prominent resistance for gold. Only and only if it trades beyond this, you can expect that we may see 1791 and 1800 as the next resistance. Beyond that, 1810, 20 and 40 levels will come into picture. I am not giving it here, but see, these are markets, though anything can happen, and anyways we are long above 1732, so you can expect that one can remain bullish here after these levels, and possibility of it to return from 1745 exists. It can return again from these levels. There is a very strong probability, but above 1745 you can expect a sharper bullish move, and then you can remain bullish in gold for 1750 or 68 levels, and then 1770 levels can be seen. So take your positions on the downside. On the other side of it, you can go short, and at which level you should go short? If you listen to it, I will recommend you to go short at 1708. Below 1708, the target is 1702, 1695. Be cautious of 1695 this time. If it trades below 1695, still there is a support at 1690. This zone, rather I will say, be cautious of this zone 1690 to 95. Below 1690, this time it is going to give you good break till towards 1680, and in fact it can hit 1660 and 1645 levels. Be cautious. Below 1690 and 1680 zone, it may call for a very strong drop, and it may try to take it further down till towards 1660, 1650 levels. Now, how to trade in these levels? You have to ensure that if you have taken an entry here, see, if you have taken a short entry here, either you have to immediately in $2 to $3 of movement, you have to put your stop loss at your entry price, and then trade accordingly. Let it get closed if the markets reverse, and you can again take an entry if you see it continuing in the same direction. So see, first thing is to preserve your capital. If you have capital, you can take 100 trades. If you start ensuring that every trade hits a stop loss, because markets are always swingful, markets always know that there is a stop loss available for a particular trade, and it may try to eat that stop loss. So yes, first thing is to ensure that you are always shifting your stop loss to cost, and then you are trailing your stop losses. Let it get close. If with little profits also, little profits are better than a loss or no profit. So yes, first thing is to preserve your capital, keep your shifting your stop loss to cost. Second thing is at every milestone, either book profits and re-enter if you see it trading in your direction. Third thing is trail your stop loss so that in case of a reversal, you can safeguard your profit. So trade accordingly, trade profitably. Do watch my daily analysis. Do not forget to like, share, subscribe and comment. Thank you very much. Have a great profitable trading week ahead. Thank you.